Good morning, ladies and gentlemen. Vasil Dikov here, Senior Account Manager with GDMFX. I will bring you today's market outlook, and we will start with the North American market and the FOMC Minutes meeting from yesterday. The most judged it would be likely appropriate to hike in June if data remains consistent with the second quarter GDP pickup, firmer labor market conditions, and progress on inflation. Some concerned that markets may not have accurately assessed the chance of a June hike. Policymakers expressed a range of opinions on whether there would be enough incoming data before June 15 meeting to warrant a hike. Some judge outlook as now roughly balanced, many others continue to see downside risks. Few saw it as appropriate to hike in April, too worried that US behind the curve on inflation may express that US growth would pick up in the coming quarters, but some saw risk that the more persistent slowdown is underway. Generally, they saw risk from the global and financial developments as having diminished, but still warrant close monitoring. Risks to the projection for inflation were still just as weighted to the downside, reflecting the possibility that longer-term inflation expectations may have edged down. Some participation noted that global financial market could be sensitive to the upcoming British referendum on membership in the European Union or the unanticipated developments associated with China's management on its exchange rate. Investors are now focused on the April retail sales report expected Friday morning Eastern US time. The Dow Jones moved sideways with 22 points range. The Nasdaq was 18 points up yesterday, and the Dixie was up to 95.26 from 94.80. The biggest mover was the dollar versus the Canadian dollar, 120 pips up, and the dollar versus the Japanese yen, 115 pips up. Today we're going to be having as events the Chicago Fed National Activity Index, the initial jobless claims, the Philadelphia Fed Manufacturing Survey, and the Fed Stanley Fischer speech. Along with that, we're going to have the CB leading indicator for the month. In Europe, the CPI data from Europe came out in line with the expectations and showed a slight contraction in the core CPI reading of 0.1%. Moving on to the UK, the climate count change was 1.6 thousand, better than expected at minus 2.4 thousand. The ILO unemployment rate came out at 5.1%. The average earnings, including bonuses, were 0.3%, better than expected at 2%. The climate count rate was unchanged at 2.1%, and the average earnings, excluding bonus, was 0.2%, weaker than expected. Sterling rallied across the board yesterday as polling data showed the Remain campaign in the referendum extending its lead by 18 points. The pound had its biggest one-day gain versus the euro of 1.4% this year. Polling data also helped the sterling reverse its downslide after data showed that the labor market is also showing signs of a cool down. The FTSE 100 closed at 6,109 yesterday, and we had major moves all across the board. The pound versus the US dollar was 137 pips up with a range of 235. The pound added 320 pips to the upside with 390 pips range. Pound versus the Aussie, 450 pips up, 465 pips range. Pound versus the Loonie, 350 pips up, 385 pips range. Pound Kiwi, 360 pips up, 455 pips range. And pound versus the Swiss franc, 250 pips up, 290 pip range. Today we're going to have the retail sales for the year and the month, and retail sales excluding fuel again on a yearly and monthly basis. Moving on to Asia, we had the foreign investments in Japanese stocks, which came 506.3 billion yen, more than the previous at 7.17 billion yen. The foreign bond investment was 851.5 billion yen, more than the previous, and 121.8 trillion yen. Asia's shares, bonds, and currencies fell along with the commodities after minutes of the Federal Reserve's last policy meeting put the prospect of a June interest hike firmly on the table. The Nikkei 225 was 215 points up yesterday, 150 points down today. The biggest mover in Asia was the dollar versus the yuan, 275 pips to the upside. In the Pacific, Australia's economy added jobs in April, and the employment rate was unchanged at 5.7%. Employment rate was 10,800 from March. Economy's forecast was for 12,000 gain. Full-time jobs fell by 9,300. Part-time employment rose by 20,200. Participation rate, a measure of labor force as a share of the population, dropped to 64.8%. Economists predicted 64.9%. The report signals the record low interest rates are aiding revival in industries like construction, tourism, and education. That's helping soak up unemployment workers as the resources boom winds down. The second straight month of jobs growth also provides a boon for government seeking to push its economic credentials ahead of July 2nd election. Still, wage growth is stagnant and investment outlook remains weak. And finally, the commodity section of the market, the crude oil stock exchange showing an unexpected 1.3 million barrel rise in the US crude stocks to 541.29 million barrels. Gold futures were lower in European trade on Wednesday as market players looked ahead to minutes of the Federal Reserve April policy meeting, which many feared could be a more hawkish than statement. Gold went down with $20 for the day. Iran oil exports are set to jump nearly 60% in May from a year ago to 2.1 billion barrels per day. The rises suggest that the country's logistical problems following years of sanctions have been overcome or were less severe than thought. Oil prices fell Thursday, pulled down by rising US crude inventories and a stronger dollar and surging output from Iran to Europe and Asia. The S&P 500 index had a range of 27 points down to 2,036 right now. Gold had a range of $25 down to 1,254 right now. Silver had a range of 55 cents at 16.72. Crude oil had a dollar range 47 at 48 right now. And natural gas is trading at $1.97 at the moment with a range of 6 cents. Today we're going to have the EIA natural gas storage change and on Friday the Baker Hughes oil rig count. That is all for me. Have a nice day.